The sixth China Venture Investment Conference kicked off in Beijing last week. More than 1,000 investors and entrepreneurs from famous private equity investment institutions attended the conference. They discussed the new investment opportunities in China as they relate to the current economic situation. The consensus of the experts at the forum had China's economic downturn forcing private equity investors to look for new growth opportunities in the sector. The country's slowing economy had reduced the number and quality of potential projects for PE investors. At present, the industry is in the process of transformation and upgrading. Data released by China Venture, a leading PE data provider, showed that PE investment cases and total volume have both been sliding since the third quarter of 2011. In the third quarter of this year, China Venture's data revealed a total of 45 investment cases and a total volume of $5.1 billion US, down from 111 cases and $8.55 billion from a year ago. Shan Xingchuan, chairman of the China Science and Merchants Capital Management Company, said at the conference that the transformation in the PE industry posed many opportunities for market players.
PE investors can focus on improving value-added services, making rational investment, enhancing corporate management, upgrading the businesses, and readjusting their strategies. Under the current conditions, investors should nurture prospective projects with a mid to long-term perspective and invest in fields and markets that they are familiar with.
Michael Zhang, president of Dover Asia, participated in the conference for the first time. His view has been widely agreed by the participants.
Any economy has a cycle which is maybe good for the market to cool down a little bit, and so people can think of the alternatives. And before IPO is the only exit for the private equity because of the high multiples. But I hope the market cool down can help people realize that there's other alternative, because the market multiple cannot be sustainable as high as the China A-share market. Even though we dropped from maybe a normal 10% GDP to even 7%, it's still a high growth. So I think we are more confident, and committed to this market.
The conference also released the annual report Private Equity China 2012. The book included 10 years data of the PE and VC industry development and will be an important reference for practitioners.